Have you noticed how earning $100,000 a year used to sound like financial success, but in 2026, it often feels average, sometimes even tight? 10 years ago, six figures meant security. Today, for many professionals in the US and parts of Europe, it feels like survival with better branding. Let's walk through a normal scenario. You're 29. You live in a major US city, maybe Austin, Chicago, or London. You earn $100,000 a year. Sounds solid. But after federal, state, and payroll taxes in the US, you might take home around $68,000 to $72,000. That's roughly $5,800 per month. Now let's subtract real life. Rent in a decent neighborhood, $2,200. Car payment, $550. Insurance and fuel, $300. Groceries, $600. Utilities and internet, $250. Student loan payment, $400. Health insurance or medical costs, $300. Subscriptions, gym, streaming, and phone, $200. A few dinners out, birthdays, small trips, $400. We're already at about $5,200. And we haven't talked about retirement investing, emergencies, or helping family. So yes, you make $100K, but your leftover margin might be $600 a month on a good month. One unexpected car repair or medical bill, and the illusion breaks. This isn't a budgeting failure. It's a structural and psychological issue. First, inflation quietly redefined what comfortable means. Housing, insurance, and food have grown faster than wages in many Western economies. Second, lifestyle calibration happens automatically. When you move from $55K to $100K, you don't feel rich. You feel upgraded. Better apartment, nicer car, slightly better social circle, more weddings, more travel, better restaurants. None of it feels extreme. Individually, every expense is reasonable. But here's the hidden math. A $550 monthly car payment over 6 years at moderate interest doesn't just cost $39,600, it's closer to $45,000 with interest and fees. If that $550 had been invested instead at a modest 7% annual return, over 20 years it could grow to around $270,000. The issue isn't the car, it's the opportunity cost. Most people don't feel broke because they're irresponsible. They feel broke because their income grows and their fixed costs quietly grow with it. Psychologically, humans anchor to their environment. If your peers live in luxury apartments, drive new cars, and take 2 international trips a year, normal shifts upward. You're not competing, but you're calibrating. The result? You earn in the top 15 to 20% of income, yet your cash flow feels middle class. If this pattern continues for 15 years, the long-term effect isn't dramatic poverty, it's subtle stagnation. Little invested, little margin, high dependency on continued employment. Financially intelligent people don't necessarily earn more. They think differently about fixed expenses. They treat large recurring payments as permanent decisions, not temporary upgrades. They view lifestyle increases as long-term contracts, and they protect margin more than image. That's the shift. Not cutting every coffee, not chasing side hustles at midnight, just understanding that income alone doesn't create wealth. Space between income and lifestyle does. So if $100K feels tight in 2026, it's not because you're failing. It's because the definition of enough moved and nobody announced it. If this kind of calm, analytical breakdown helps you see money more clearly, consider subscribing.